technical analysis. Well, it's Sunday evening. I'm out on the West Coast, so I'm not a West Coast person, but I'm out on the West Coast. So it's a little later for you on the East Coast. But I wanted to go over my current three buy recommendations. So let's get into it. Before we get into it, there's a real battle going on here between the stock market negative divergences over the short, intermediate, and long term. We actually, as I've talked about before, have a 4.5 year negative divergence, which at some point is going to matter. But we are going into the seasonally strongest time of the year, at least over the next 3 or 4 weeks. And so we're trying to do a juggling act here. As you can see, as charts break down, I have less buy recommendations, and most of them are commodity based, which has been uh, my overweight over the last 2 years, probably. So with that backdrop, let's get into it. I only have three buy recommendations at this point. Right now, I'm neutral on the overall market, short term. And here's my buy recommendations. The first is Chevron. Um, Here is the bullish pattern. Okay, so the bigger the pattern, the more potential upside. And you can see this is a 1, 2, 3 year symmetrical triangle. A, B, C, D, E, all the necessary touches. Had a couple of fake breakouts here, and but if it is able to break out above, let's say it gets to 157.5 or 158 on a closing basis, it could put this in play. And you can see our stop here at 152 seems to be relevant because each time it breaks that, it regains it. Last week, intra-week, it hit the low. And then by the end of the week, it created a bullish hammer. Bullish hammers are where prices start the week at the high of the range for the week, and intra-week trades down. And by the end of the week, it's back up near the initiation of prices for the week. So the price projection based on this pattern arrived at by measuring the base of this triangle and projecting that distance upward is 212, which is a little over 30%. Now, if that happens, you're going to see energy be on a tear. And again, we're waiting for this because it will definitely help the buy recommendations. Energy, particularly crude oil, has been the laggard and it's been trading sideways. Oil looks pretty much like the pattern of Chevron here. So, the government is doing everything it can to keep oil prices down, but sometimes the markets have other thoughts and they kind of take the lead, and you can't manipulate markets for that long. So anyway, Chevron, huge upside potential, and our downside is limited. We're at 152. We're currently is our stop, currently at 155. I don't know, that's 1.5%. Your potential upside is over 30. That's a really good reward to risk. So that is still a buy rating, strong buy rating. Okay, this is the iShares on the commodity theme. This is the iShares commodity ETF, and this is energy heavy. So, earlier, 2 years ago, going bullish on commodities, I was very bullish on the metals, precious metals, silver, gold, platinum, all those things that you benefited from. But this index is more commodity. I'm sorry, more energy weighted. So this is 40 to 50% energy, And since crude hasn't gone anywhere, it's kind of gone sideways like this. Uh, the overall index has. But if you measure the base of this triangle and you project upward, that's about a 35% upside. And you can see just recently over the last 5, 6 months, it's been coiling very tightly. So we hope it breaks out to the upside. And, if you're a consumer and you're going to have to pay higher commodity prices, if this happens, this might be a way to offset it, own the actual commodities and profit from that. So that's where we're at. You can see went bullish on 831 at 2277. We're just slightly higher than that. And our stop is down at 21.5. So again, these are a couple of patterns that have huge upside with limited downside. That's the best scenario for a market technician. Corn. Anybody talking about corn? No. Why would you? Um, this is the big downtrend that occurred from 2013 to 2020. And in 2020, we saw a change of trend. We saw things going from down to up. And we have definitely a five-wave advance here. One, two, three, four, five. Elliott wave theory suggests that trends of five suggest that the direction has changed from down to up. And now we've got a three-wave correction down here to the low. And I want to point out two things before I forget them. And one is as we hit the peak of wave one, you can see we got higher highs. So it confirmed this peak. That's good. We don't have a negative divergence suggesting, a change of trend. It's just they're working off this overbought condition. Look at these volume bars. Wow, huge. And then we get this corrective, and usually wave twos are deep corrections. And the whole thing with the Elliott wave theory is it suggests that trends or cycles go in waves of five, with one, three, and five in the direction of the bigger trend, and two, which are normally deep corrections, and four, which are more sideways corrections, uh, all in the direction of the trend. Now, on these lows that we got here recently in 2024 and 2025, we got higher lows on our RSI, our relative strength index, suggesting the overall decline was going down on less interest, on less oomph. So most of the sellers, they capitulated. They threw it out. They said, "I can't look at this anymore." And you look at the sentiment on corn. Has it ever been worse? Every farmer is complaining. A lot of political stuff going on, and so this is the perfect storm for a third wave advance. So second waves, usually you get really bad sentiment here. And on second waves, even though it's a higher low, you get weak sentiment, not good sentiment, but not as bad as it was down. Actually, you get worse sentiment here than you did back in 2020 on a normal Elliott wave decline into a second wave, and it washes people out. And third waves are what you want to own. This is what I look for. I look for it in, it's a added plus because third waves are the most powerful. We had one in MP Resources. We had one in rare earth materials. We had one in solar, the solar ETF, TAN. We had one in platinum. We had one in silver. We had one in gold mining stocks. This could be the next one. So that's the potential. I know it's boring, but when you really think about it, it's a perfect setup. So let's take a closer look at this. I think I have it. Oh, seasonality. So seasonality, knowing commodity traders in Chicago, the Board of Trade, which is where all the commodities were originally traded. Um, sentiment, especially in the grains, is a huge thing. So here we are right in the sweet spot. And so corn on a seasonality basis looks really, really good. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Have a great evening. Hope you have a great week. I'm going to be traveling, so if I have to give an update, I will. If I don't, I won't. There's a possibility I do a buy recommendation tonight before I leave. Thank you. Have a great evening. Adios.
Mhm.